We are 15 minutes to the top of the hour, rolling through this Tuesday here. Hope you had a great weekend. Rich Nelson joining us from Allendale from his offices. Rich, I was in Missouri for the Memorial Weekend. A lot of rain there, off and on, and some severe weather. Son lives in Wisconsin, off and on rain there. Boy, this market doesn't look like there's any rain around the area the way they're pressing it today.
Certainly true here. It looks like they're still focused on the soybean market in particular here. And certainly on this case, discussing these issues with Chinese crush margins, still talk about cancellations maybe of U.S. old crop bean sales. And heck, even talk of what is a valid point, a poor start to new crop procurement as well.
Now, we do get fresh information here just out, the weekly grain export inspections. Take a look at those numbers and get your thoughts here, looking at a corn number at over 1 million bushels here once again. Million tons, right. Excuse me.
True. As far as the corn, 1.19 in this case, million tons. In fact, just a little bit over last week's 1.14. So corn numbers a little higher than last week. Soybeans, 336,000 metric tons. That was a little under the previous week's 349,000 tons. And as far as wheat, those numbers were 603,000 tons, which was under the 675 from the previous week.
Very good. So let's take a look at the corn futures, and we'll run through these, get your thoughts here. As I mentioned, a lot of pressure here from the open, but it hasn't really moved a lot since the open here. Still 6-7 lower in corn. December there, 385 3/4. Talk about that corn and December in particular.
Certainly does feel like a lot tougher, a lot lower pricing than it's actually seen here compared with this past 3 to 6 month or 3 to 6 week range. Keep in mind, we could actually drop this market another really 7 cents or so, 8 cents before we start breaking below this sideways range on corn. Certainly a different story on the soybean side, still pushed into new lows for the current downtrend. In fact, today's numbers, looking at the new crop discussion, 918 1/4 as far as the last low price on today's discussion for November soybeans.
And lowest, Sarah, since late March, or in fact, March 31st of last year, since we've been down to these levels.
That's certainly right here, and this is certainly adding a little more concern right now, and a lot of people will be suspecting the idea of a sub-$9 bean price on these futures potentially before we start talking about summer weather scares later on. So
10 to 13 lower. Come back and cover these numbers here. 10 to 13 lower. November, they're at 9.20 though, is 2 cents off of their low of the day. Let's take a look at the wheat trade. Wheat number, our export number, was just below a week ago, as you mentioned, and they're 8 to 9 lower this morning in Chicago. Well, right now, I should say.
Certainly true. We still have some moderate rains lined up here for both hard red and soft red wheat areas here this week. We've got the first spring wheat condition rating expected for the crop progress report this afternoon. That one should actually confirm pretty good ratings as far as the spring wheat side as well.
Watching dry areas, though, I understand North and South Dakota and parts of northern Minnesota need some rain up there, we are told.
Certainly could be, especially considering these guys have not seen the very heavy rains that a lot of the south and southeast portion of the Corn Belt have.
6.5 to 7 cents lower in Kansas City that July there at a 4.30 level here, kind of in the middle of the range here. Been about an 8-9 cent range here, high to low, and then. Minneapolis to complete the circle here for wheat, down 4.5 in Minneapolis in that northern belt. And cotton at this moment, looking at a mixed trade there, nearby July higher, as is October. Deferred contracts a little bit lower on that cotton trade. Rich, we're going to take a break. Rich Nelson joining us. We're going to give him a break, come back, and we'll check the livestock trade, get his thoughts there. Cattle on feed report, not very friendly. They had a little time to trade that on Friday before the holiday. We'll see what he thinks now, 4 days later. Rich Nelson joining us here from Allendale. Rich, during that break, coming back, we're showing a lower crude oil market and a lower dollar here. Seems like it might be kind of like a national down day here in commodities, financial markets here as well.
certainly has been a case here for us, and especially on the crude, like you mentioned, we're now actually breaking back below that $50 per barrel mark. Been kind of a big bellwether price for us to watch, and certainly this does represent some general commodity-wide selling here today.
All right, let's go back to livestock futures here. We promised our viewers and listeners we'd cover that and get your thoughts there. Cattle on feed report. Wow, a lot of pressure, and I guess rightfully so, after the cattle on feed report showing the placement number was way above expectations. Coming back here, June down 38 points, but August has already turned higher by 13 points. Talk about the cattle complex.
Yeah, like on this one, I think we can make some valid discussions about both this discount to June and certainly as we go into the first notice day here, lined up for next Monday, what that could bring for us. But, you know, as long as we're lined up with maybe a $1 or $2 break for cash cattle this week, a lot of people will suggest that perhaps that June is not too bad. And also, this market reaction right now to the cattle and feed report doing pretty well after starting out maybe a little mixed to lower.
Then looking at feeder cattle, and we'll get get his thoughts there. I'll get the numbers, but we are generally 20 to 40 points higher in feeders. Are they leading or following cattle right now?
And maybe here for the short term we're leading, but certainly they're following here for most of the way up and maybe the way down as well.
Yeah, I guess when you're $4 decline on Friday, you're going to get hopefully a little bit of that back here today. And again, I'll get the numbers. Rich, I want to close things out with you and talk about this hog trade here, lean hog complex. And we did see the market under some pressure here, but still above $80, 81. Matter of fact, I'm not sure 10 days ago people would have guessed we'd still be above $81.
That sure is right, and let's keep in mind this is still a very good price for hogs, especially with this supply we're offering this market 3 to 5% higher than last year. So this is something which you have to keep in mind here. As well, also cash hogs last week only up 33 cents, the week before only up $1. So maybe this market has gotten ahead of itself on the futures end. That now we're waiting on cash hogs to come kind of pick up the second half of the move here.
There you go, and we'll have the updated numbers here in just a few minutes. The midday beef cutout, pork cutout as well. Rich, thanks for your time. I know it's a busy Tuesday after the holiday, getting your folks, your customers and clients taken care of. So we appreciate your minutes with us.
Sure, thank you.
Rich Nelson from Allendale joining us here today at near mid-session. All right, promising the numbers. Let's go back to live cattle, feeder cattle, and hog futures. This is up to the minute live quotes from CME Group. Mostly a higher live cattle trade, although June is a bit lower, 38 points lower, although Rich Nelson suggesting that maybe pretty good fair value in here with June just above 122.25. So June right now, 122.32 is down 38 points. August closing in on the 119 level here, been way below that, but 119.02 now actually up 7 points after a low today, 117.95. All right, feeder cattle trade over a $4 drop on Friday after that cattle on feed report, rebounding 15 to 30 points. August up 15 at 147.10. Again, the August in the lead now. September up 30 points, 147.05. And in our hog futures, under some pressure here through this time, but again, June holding right at 81, July 81.38, and August 81.12, all above 81 obviously, but still lower by 15 to 80 points, and we'll keep an eye on that. And we'll get our midday summary here coming up in about 5 to 6 minutes.
Okay, thank you so much, and welcome back.
Thank you. Good weekend. You too.
Markets editor Mark Oppold.